All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. And Bitcoin is getting a little bit of a pump today. Actually, a little bit unexpected here for me. I was looking at this golden pocket area rejecting last night. Now, we did get that rejection from the golden pocket, but it wasn't very big. And you would have probably got stopped out after TP1. I was asleep, or I wasn't focused on the charts. It was late at night for me. And so I did not take that. But this golden pocket yesterday, we were looking at the golden pocket into the bearish back test of our big pitchfork band. We did get a hit into that and then a small rejection here. But now we were able to find a higher low and then pump a bit. But guys, we did yesterday in my video, I talked about this range here and I talked about trade the range. Right now we're in a smaller range after our crash 12 days ago. And what do? We just trade the range. I said, look for shorts towards the highs of the range, look for lows towards the bottom of the range. Well, what just happened just now? We had the SFP of these three highs, and I did talk about this yesterday, that we do have some liquidity around these three semi-equal highs here. We could come up to take that liquidity and then dump. And this is exactly what looks like it's happening now. We came up, we SFP'd the high into our value area high of our range, and we're starting to dump. So that was a valid short to take here. Now, if you did take that short, you want your stop above the local high here, because there is a possibility we could come up one more time. We actually did not hit the actual golden pocket of the bigger pull. So if I go ahead and zoom out here, let me zoom out to like the 2-hour chart, and let's do our golden pocket pull from our 102.5K highs down to our 94K lows. And you can see our golden pocket was just front run a bit here. Also, if we are looking at this as a smaller ABC correction to the upside, we can do our trend-based Fibonacci extension. We can do our pull here. So in your wave A, you see an impulse. We did see that 1112 impulse. Wave B here, corrective, and then wave C is using impulse 2. We'll look at where our wave C would end, right at the golden pocket here. So I do think it's possible that we do bounce coming up locally here, maybe at the VWAP, and make one more high up here. We don't want to go too much lower though if we zoom in on this. So just wanted to show you this real quick. If this is an ABC correction to the upside, we do have our highs just above us, our golden pocket and our 1-to-1 fib target just above us. We could make one more high into this area and then see a dump. Or on the other hand, I'm going to cover a bigger, larger time frame scenario in just a second where we might be able to pump to 105 area, 105-ish. So, but let's zoom in on this. Let's zoom in on this and let's look at the 12-minute chart here. So we can see yesterday, I mean, really this pump up today here. We hit these lows yesterday. We hit in around our value area low in golden pocket, and we made a move up from there, came down, made a higher low here. So this looks like it was, I mean, this is a bunch of chop here, but this, I wasn't looking at this as too impulsive, but I mean, if it is a bit of an impulse, it's a really crappy one, like a diagonal. But here we dropped down overnight, made our low here early this morning, really. And then since then, we've been pumping here. And we can look at this as a possible 5-wave impulse. But now it's kind of starting to invalidate, not quite invalidated yet. We were seeing local bearish CVD. I just pointed this out in the chat. We were seeing local bearish CVD here. So you can see lower lows in the price action here, higher lows in the here, and then higher lows here. And you can see right now we are initiating a long squeeze. A bunch of people were longing up in this area, and we are starting to squeeze those people out here. So we might see a drop. And actually look at this volume coming in right now. All right, that's why, and I did warn about this local bearish CVD in the chat about 15 minutes ago, right before I started this video. This was a valid short, swing failure pattern into a value area high. I trade yesterday, I said, look for shorts at the top of the range, look for longs at the bottom of the range, trade the range until it breaks. I did want just a little bit higher here. I wanted to see a wick a little bit higher here, and we still could get that, because we could be looking at this very small thing as a micro impulse here after this correction here, We have our 1 wave here, our 2 wave here, our 3 wave comes up to here. Maybe we're in our 4th wave, and then we see our 5th wave end right there, hit into this golden pocket, hit into the 1-to-1 fib target, and then see a dump. So I am looking at this still as a possibility. Let's go ahead and real quickly here, let's look at our Fibonacci pull from the end of wave 2, if this is a micro impulse, to our wave 3 highs. Okay, so the golden pocket is coming in right around the VWAP and right around the back test of this band. I do like that, but let's look at our 0.5. I mean, it is around these prior highs here, so I'll be watching this. If we start to bounce from here, we might get a move up to here. We just have to kind of keep an eye on this. As far as this goes here, this really small time frame here, this 3-minute chart, I mean, it does look like we're kind of in a channel here. And we're at the low, or coming up to the lows. I mean, if we chop for a little bit more, come down to the 0.5, that's where our prior highs are here. That would be kind of nice. But, I mean, this also could be the end, and we could just dump back down as well. Not clear yet. So let's zoom back out here. Let's go on to the hourly chart. Yeah, SFP into value area high looked pretty good. We're just trading this range here, this volume profile. Anytime you come to the highs of the range, you look for shorts. Anytime you come to the lows of the range, you look for longs. And coming into, with knowing that we're coming into the weekend, maybe we just continue to chop in this range over the weekend. And I did talk about that larger fractal where you kind of see 2 doji candles, and the 2 doji candles would be within the highs and the lows of this range. So that does make sense that we could chop into this range maybe till Sunday afternoon and then see a flush down and then pump up. But I do want to talk about a different scenario right now. So let me go ahead and delete this. I'm going to go ahead and delete this. We're going to delete this here. And let me get rid of the golden pocket as well. And we're going to talk about a larger time frame. Let's go to the 4-hour chart. Now, this was a pretty clear impulse. I mean, $10,000 crash here. We had our all-time high up here. And we could see this as a 3-wave corrective move here. You know, something like this. 3-wave corrective move. But I do think that, I mean, this was a clear impulse here the next day on that Monday. I just am not concerned with the higher time frame divs, and we are looking at the possible. Let me actually go to a different chart here. Yes. Is this it? Okay, there we go. Let me get rid of this here. So we are at the top of our log cycle channel, and I've showed you guys this in many videos. I'll just zoom out on it real quick. Let's go to the weekly chart, and that is this log cycle channel, and we could be looking for a distribution pattern up here. And what do you see in a distribution pattern? You see 3 really key pivots. You see your first initial high. You come down, you have a second high that's always higher than the first high. We did confirm that, even though it was SFP, it was a second high. And then if it's a Model 2, you look for a lower high to come in. So let's go ahead and zoom back in here. And what we could be looking at after this dump here from the all-time high, we had our pump up here. It could have been now I'm going to just go over this. This could have been an A wave in a corrective move. And an A wave is an impulse. So we did have our 1112 impulse in the A wave. Our B wave came down, our corrective wave came down to our 94K low liquidity grab that we were looking for the whole week. And we finally got it a couple days ago. And then our C wave could be coming up to around the 105K area. And I'm going to explain in a second here. First of all, we have a naked daily point of control up there. And if we do a Fibonacci pull, and then this could be the end of this C wave could be our last touch in this distribution pattern. First high, second high, third lower high, Model 2 distribution pattern, hit into 105, and then finally dump. This is something that I am concerned about with the weekly bearish divergences and with the monthly bearish divergences. So I just want to put this in your guys' brains so that you are aware and looking at this. Still, a move to 105 short term is bullish. I mean, that would be really bullish to see. I don't think that's going to happen till next week. So we probably range over the weekend and then maybe slow grind up over the weekend just a bit. But we are at the top of our larger log channel, and we are looking for a possible distribution pattern up here. And if this is a larger ABC correction, well, then that distribution pattern, a Model 2 distribution pattern would make sense here. So we can do a trend-based Fibonacci extinction. We'll go from the lows of A to the highs of A and to the lows of B, if this is our low. 105,357. Now let's go ahead and turn on our naked daily points of control. Let me go to daily. All right, so naked daily point of control up here. And then we also have, now let me turn this off. And then if we do a Fibonacci pull from our all-time high to our crash lows, and we go to our 786, 786 is pretty much right there as well. So we could be looking at, and actually on Coinbase, this is a bit nicer. Let me go to the Coinbase chart. Yeah, so, all right, guys, here we go. 786 is right on top of that 1-to-1 fib extinction target. We do have our naked daily point of control here. So this resistance up here could be the end of our bigger ABC correction. And what I would be talking about is just what I showed you there. A here, B here, C up to here, and then C a dump. And maybe it could be the dump. So I'm watching this as a possibility. The reason why I am looking at this as a possible ABC wave is because when we were in, we saw this clear 1112 impulse to the upside. We rejected from our weekly and our anchored VWAP up here. There was also a naked weekly point of control up here. And then we've been correcting. And this correction has gone over 11 times longer than our impulse to the upside, than this impulse. And if we were looking at this as a wave one, like initially I was looking at this as a wave one impulse, we were looking for a wave two and then a wave three to explode out to maybe 103K to our value area high of our big November 11th range, 4, 5. But because this correction went so much longer, it highly reduces the possibilities that this is a wave one here, a wave two here, and then we're going to explode out in our third wave here. It just doesn't align time-wise with and technically wise with a 1, 2, 3, 4, 5 impulse wave on a higher time frame, like on a like a 4-hour impulse. So, and with that, we have to look at the bearish scenario here, also taking into consideration the higher time frame weekly bear divs, the higher time frame monthly bear divs, and being at the top of a cycle channel. We have to keep this as one of the scenarios. So A, B down here, C could come up here, and that could take another week or a week and a half or so, come up to 105, and then we could reject from 105 up here and then dump. So that is a scenario I am watching. Now that does mean over the next week or two, we can expect some bullish price action to the upside. And if that's the case, we want to see in our C wave a 5-wave impulse to the upside. So with it coming into the weekend, of course, when we hit those 94K lows, we did have that small 1112 impulse. And I showed you guys that a couple videos ago. We were correcting all day yesterday down to our golden pocket and our value area low of this range here, this smaller range. And then we would want to see a third wave explode us up probably to like 101 or 103. But right now we are rejecting the value area high. What we could see, because it's a weekend, we could actually see something even a little bit more bullish. We could see like a 1, 2, 1, come back down to the point of control over the weekend, see a 2 here, and then explode up in our third wave to 103, 4, 5. And that would be our C wave, 5-wave impulse here. And then actually you would look for 4, 5 too. You'd look for 2, 4, 5s, but you get the idea. Overall, we're looking for that impulse to the upside here in a C wave. With it being the weekend, we could just range for a bit in here, and then Monday continue the impulse to the upside. Now, we are above our large point of control now. So this is a a bullish signal. We finally got above it. We need to close the daily above though. If we actually close the daily back down below 97.4-ish, we're going to be in trouble here because that's another failed attempt to get above the point of control, and we're just rejecting. We have to remember this point of control is a much larger time frame point of control, so we should be looking at it on larger time frames as a possible kind of resistance and support that we need to either flip to support if we're bullish or reject and drop to the downside. I'm a little bit bummed we didn't come down to our small time frame liquidity grab yesterday that we were looking for the start of the impulse at that 786, but you know, you get what you get. So we were looking at this little impulse here at the start of the impulse of our 1112 here from a couple days ago. Didn't get it. Now we are just kind of correcting here, and much smaller time frame. We could be in a 5-wave impulse just in this structure here, and it would be nice to come up to this box here. We do have our anchored VWAP now. Our anchored VWAP's drifting a little bit below the box, but it's in this general area here. Anchored VWAP and our golden pocket pull, and that golden pocket pull is our golden pocket pull. Let's zoom back out here. It's from 1025 down to our 94K lows. This is the golden pocket in here. And you can also see, guys, this anchored VWAP, anytime we come into this anchored VWAP, you do see a little bit of wicks past it, which would be nice because we need a little bit of a wick past it to actually hit into our golden pocket. Wick past it, rejection. Wick past it, rejection. Do we see a wick past it into our golden pocket and a rejection? And then, but if that's the case, we want to reject and hold above our point of control. So if we do hit it up into here, I am going to be looking for a TP1 at this large point of control here, at least, maybe even sooner than that, because we are expecting a possible bigger push to 105K as a scenario. And let's go back to this chart here. Let's go onto our daily time frame, and let's go ahead and look at this bars pattern here. I mean, so we're still just kind of playing this bars pattern a little bit. If we do, now that we've pumped a bit today, if we do close it down a little bit more, it'll look more like a doji, kind of like these two. It's not going to align 100% perfect, but this is still a possibility I'm watching as well. And now this would invalidate the wave C to the upside, though, if we are looking at that as a bigger A. Oh, wait, where is that? Zoom out. Zoom in. If we are looking at this as a bigger A, B, C to the upside here, then coming down and taking these lows would invalidate that. In some ways, that would be the bullish scenario. This is the bullish scenario, coming down, sweeping these lows here, and then making new all-time highs. So we have a couple different scenarios. We have a bullish scenario. We have a bearish scenario. As a trader, you do look for scenarios on both ends, and you play whichever one comes out. Okay. Yeah, so a lot of you guys longed that 94K SFP with me. I had that on my charts for a long time before it happened, for a full week before it happened. We were patiently waiting to get to that level. And 2 days ago, we finally SFP'd the start of our impulse of our 1112, or 112, excuse me. These lows here, we SFP'd that and finally got our move up here. And so we did see a lot of really nice confirmation on this. Like, look at this whole corrective move. And during this whole corrective move, I was showing you that this was highly probable that this was a correction because our volume was decreasing the entire time that we were making that move down. And so a volume decreasing the entire time. And then we also had our volume increase into the SFP here. And look at our market cipher B on the 4-hour. Bull divs like crazy with money flow coming up the whole time. I mean, this was the long to take. I'm still in this long, by the way. I've taken 2 TPs on it. And my next TP, I'm going to let it run. I'm going to let it run at least to 103, maybe not to, maybe to 105. So we do have, I mean, but look how nice this was. The lows here, bull divs all through here. Money flow coming up. That's the bullish Sam Bankman-Fried man boob pattern for those of you who follow Jason Casper. It's a silly name, a cool name. I love it. I love how he names his stuff. But it's a legit pattern to follow. This pattern is so legit to watch for. And if you see that, you can expect, especially if you're coming into a support and getting confirmation, take that trade. Yeah, so I mean, we're just still playing in the range, though, guys. I'm giving a bunch of possibilities of breaking out of our smaller range here into our bigger range, but right now we still are just in this smaller range. So what do? We play the range until it breaks. Right now we're at the highs of the range. We are seeing a small rejection from the highs of the range, and if we do reject here, I mean, the point of control, we can first look for the point of control. Let's go ahead and do a Fibonacci pull from the lows that we made yesterday to our new highs. And let's look at a couple things here. Let's look at a golden pocket. Actually, our lows that we made yesterday weren't there. We're there. Okay. Yeah, I like that a bit better. The 786 into our point of control is a local support area just because we do have the liquidity here. And then, this area, this is a very small local support. But be careful, guys, because if we do start seeing bigger explosions, we can see these local supports get busted through so quickly, just like our golden pocket did yesterday, that we were looking at yesterday. So, but it is coming into the weekend, so we can expect lower volume chop. And Friday is not over yet, but it's getting close to being over here. New York closes soon on the East Coast, and we can look for just to play this local range here. So if we're going to play the local range, now that we're rejecting from the value area high, we can look at the point of control, and then if we lose that, we can look at the value area low. Still, though, now that we are chopping around this bigger pitchfork band, we do have the VWAP around this bigger pitchfork band of support. It is also our local golden pocket, our most local golden pocket. So let me zoom in on this. Let's go to the 15-minute chart here. And we'll do our Fibonacci pull from the start of 3 to the end of 3. And that is of that real small impulse that I just showed you guys. And so you can see golden pocket, VWAP band coming in here. That could be a local area to find support as well. Let's take it from the lows here. I mean, that's even nicer. So this 97.2. And then if 97.2 doesn't work, then we can come down here to this 96.1 to 96. 96 pretty much. 96.1 to 96. Yeah, we were seeing the bearish CVD up here, guys. It was towards the top of a range. Do not get too bullish, especially coming into a weekend, and think we're going to break out to 200K. It's not probable and likely. So trade the range until it breaks. Short the highs of the range, long the lows of the range. With proper risk management, because say this did break out. If you shorted here, your stop should be above this wick that we just created. If you shorted the SFP, you should have your stop, and the SFP was around this area. Your stop should be above this wick here. Give it a little bit of breathing room. Your TP1 actually could be this area here. So that already is a 6.5 risk to reward ratio. That's such a great trade already. And then if you really, your point of control would be your next TP level. And then after that, I mean, you could look all the way back down to the bottom of the range here, or taking yesterday's lows. Look at that. Look at that trade. 17-to-1 risk reward ratio. Now, of course, you want to at least TP1 here. It's your first local support level. Yeah, so that's about it, guys. I mean, Bitcoin is chopping. We did talk about yesterday in the video that we have these triple tops, semi-equal triple tops up here, that it would be nice to grab the liquidity for those tops into our value area high. I am a little bit bummed that we didn't come just a little bit higher, because I did want to come up. Oh, let me start doing this. I know some of the guys in the Discord say that thing gets in the way, so I'm going to keep trying to remember to do that. Yeah, this anchored VWAP into golden pocket. I was looking for that. Plus, that's also a 1-to-1 target. I showed you guys that earlier in the video. So, a little bit bummed that we didn't get that, but let me check Coinbase here. Yeah. Not 15-second. Looks like Coinbase's VWAP is a bit higher than Bybit's. All right, guys, that's about it here. We can check to see real quick if we are making continued bullish or bearish CVDs. Yeah, look at this. This volume on this push down here has been pretty big so far, comparatively. I'm just looking at something here. It would be nice to see some bullish CVD divs. Remember, I talked about this being a micro impulse here. And so the start of our wave 3 is right here. You can see that our CVD is right around that area here. We're about even with it. So if we can come a little bit lower with our CVD, maybe down to that golden pocket, we could be building some bullish CVD divergences in the sense that we would be seeing our higher lows into our golden pocket area. This CVD, if it continues to go down, now we need it to continue to go down, but we would be seeing lower lows in this area if it continues to go down. And then overall, we would be seeing higher lows in the open interest. Actually, let's check this out real quick. Ooh, yeah. So, guys, we did see these bands were starting to compress. And anytime you see these bands compressing, similar to Bollinger Bands, you do see a move. So yesterday, we were able to finally get above this middle band here. You can see we back tested the middle band and pumped. Now they're starting to expand. So the volatility could not be done yet. We do have some liquidity right down here. This is just a 1-minute chart. So this is very local liquidity. 97.3, which is right at our point of control. So if we come down to our point of control, grab that very little local liquidity, and then make one more move up into this golden pocket anchored VWAP area, then see the range continue for the weekend. Okay, let's go to Ethereum. Let me zoom in onto the hourly chart. Yeah, so yesterday we were looking at this area as a possible local resistance area. I mean, we did kind of get a small reaction from it, but similar to Bitcoin's golden pocket, we kind of busted through it. That's the so guys, with local areas of resistance and support, when crypto starts to get volatile, it can bust through those so easy. So please be aware. I always say these are local and they can get busted through so easy. And that's why we have to be just cautious. If you're not seeing your bearish divergences, you shouldn't be taking it. And I'll actually explain that because I got stopped out on an XRP short yesterday and I invalidated my own rules. I just liked the ABC correction target there. Now, it did play out a little bit, and I did take a little bit of profit when I saw it starting to make a bullish triangle. I'll go into that in a second. But then I got stopped out on the rest of it, and I did lose a little bit of money because my stop loss was a little bit bigger than the small TP I took. But it was a very small loss. Anyways, that's what I'm talking about with local levels. You could get them busted through real quickly if you're starting to see an impulse. And so just be aware of that. Ethereum here. Ethereum, we are still kind of trading in this same range as well. You can see we did SFP. Did we have? No, we didn't SFP these highs. Okay, so that's kind of a little bit. We double topped them. So now, guys, we do have a higher probability. We have twice the liquidity up here now to take. So our point of control is in this area here around the backtest of the weekly log fib channel. And that would also be, let's see here. No, golden pocket's not there, but not too much else in alignment, actually. 0.5 is there. Yeah, I don't like how this looks zigzag structure-ish. So this to me does look like a little bit of a zigzag structure. I keep forgetting this is up here. And that means it could be a three-wave corrective structure before we just come back down. Little bit of support here at 2700, 2703. But this is local, guys, and this could get busted through if we are going to start doing our weekend price action. Like if the excitement is over for today, then yeah, we could look for a small bounce here and then maybe just even take it up to these highs. If I long this here, well, first of all, if you're longing that here, you'd probably put your stop below this local low here, and then your TP would be up here. That's a 3 to 5 risk reward ratio. That's an acceptable trade, in my opinion. .5 risk reward ratio. I said 3 to 5. Okay. Still, support below us is still support here. We have our daily. We have a naked daily point of control. We have the value area low and the 786. Now the 786 is still the same 786 because it's the 786 from this low to this high. We have not made a new high yet, so our 786 is still down there. And this box of support is between 2602 and 2582, I'll say. That area there. And then above us, now we can watch locally now for the SFP of these semi-equal highs here. But this SFP into this daily does look a little bit nicer here at 2883. We did finally actually break this channel to the upside, this descending channel that we kind of been in here. So I'm going to go ahead and get rid of this channel now. Let me go ahead and hide this for a second. I am still concerned about this being a bigger A wave, a B wave, and then a C wave. Still concerned about that. Let me check something out. Let's do our golden pocket pull from the highs to the lows. Yeah, okay, so that's, I mean, there's a reason why we're rejecting where we're at right now, but we already hit into the golden pocket once. 786 is close to our SFP, but I don't like how it's before the SFP, so I wouldn't be paying too much attention to the 786 here. I think that daily's a much better level to be watching here. All right, let me zoom out on this, and we'll check our new naked daily points of control on this. Oh, yeah. Okay, guys, so that is definitely a local support area, that 2700 area, because we also have a new naked daily point of control there. I mean, it is today's, so today is not finished yet, but right now, today's point of control is there. I'm not saying it might not be naked by the end of the day if we come down here, so yeah, I'm gonna just leave that off the charts for now, but we also have this one down here that confirmed yesterday, and we'll mark that on the chart here. And let's look and see if we have any confluence with that. So let's do our Fibonacci pull from the lows to the highs here. Golden pocket's just a bit below it, but Let's actually look at this move here. Okay. One, two, three. This is an area to watch. I do actually like this better here, though, because it's our point of control of our range. It's our 0.5, and it's the bottom of the log fib channel. Not fib channel, the log channel on the weekly. But also, we do have a point of control there from today's price action. Now, that today's price action hasn't closed yet, so it's not confirmed a naked point of control yet. But this 207, 2700, excuse me, does look decent here. And then if we break that naked daily point of control from yesterday at 2653 into our 786 at 2652, pretty much. Those are the local levels to be watching if this range is going to continue. This range here. Oh, and our value area low. No, never mind. That's not our value area low. Okay, that's it for Ethereum. Let's go to Solana. Solana is rejecting from that area that we wanted to see. Like, let's see here. This was only a local level, but it did kind of work out here. Point of control. Now, this actually shifted too. The point of control was up there, but it's close to our value area high. We actually haven't hit into our value area high quite yet. Of course, that didn't work out. That's one of the local, very local things we were looking at yesterday is an SFP of that high, but didn't get that. And you wouldn't have taken that because we busted straight through it here. So you wouldn't even attempted that short. Don't ever set limits at SFPs. That's a really good way to get wrecked. But we are near the top of our range. So same concept, guys. Trade the range until it breaks. We're at the rate. We have a range forming for the last 12 days. Highs, when you're at the highs of the range, you look for shorts. When you're at the lows of the range, you look for longs. And we did come up into that area. We're looking for shorts. I didn't take that short, by the way, but just looking for them. We can do this pull here. And we already hit into our golden pocket once on this, in this area here. But so our golden pocket's not going to be near as strong now. Yeah, if we break this value area high, so Solana's looking kind of bullish here. If we break this value area high, then I do think we're coming at least for the highs up here, into the back test of the pitchfork here, but or the channel. No, that's a pitchfork. Yeah, this was something I was kind of playing with, but I don't like that. Again, guys, we are breaking our much bigger descending channel on Solana all the way up from our $300 level here. So you can see we've been in this descending channel, this blue descending channel, for quite a while now, and we are starting to break it here. Also, this was near our value area low of our much bigger range. So we're going to go ahead and get rid of the channel now. It does look like Solana is trying to find a bottom here in near this value area low. It would have been really nicer to come down just a little bit more, and we still could get that one more push down. One more little push down here would be nice. Let me just look at something real quick here. Let's take this ray. Yeah, I mean, there's some respect on it. I don't like it too much. You can see here, though, broke out of it, back tested it, pumped a little bit. But yeah, I wouldn't be looking too much into that there. Same concept, trade the range until it breaks, but you can see every single coin in the market that we're seeing right now, we're coiling up slower and lower and lower and lower. And then do we see an explosion up or an explosion down? We are starting to coil up on all these coins. We're starting to build liquidity on both sides to be swept. And we can look very soon here. And when I say soon, I mean within a week or two. We can probably look for a big move either to the upside or to the downside. I still do like on Solana, we're still looking at this support below us, the 786, the SFPs into the 786, and the bottom of our bigger channel. That is from 185 to 183. And then, of course, to the upside, we do have this naked weekly point of control with our regular range point of control up here and a 0.5 up there. So that is nice too. That's our big resistance to be watching, our next big resistance to be watching. Of course, we always can keep into mind these highs here. And that's why they're marked on my other chart at like 220-ish. Come on here. These highs, 220. Okay, Solana, that's it for Solana. XRP. Now, okay, let me cover this because yesterday in my video, I was talking about a possible ABC correction and an ABC correction being finished and looking for a possible dump. So remember yesterday in the video, we were looking at this as our A, B, C here, and then we were looking for a possible dump from this area because we hit into our golden pocket. We hit our 1-to-1 fib extinction target, almost perfect. And so I did say in the video, if we do come back up into our anchored VWAP and into the golden pocket area up here, because we were watching it right after it happened in this dump area. And so I set an alert and I was looking for this golden pocket retrace here to look for a possible short. Now, I did take that short when we started rejecting the golden pocket. And someone asked me about this in the Discord. Did you take the short? And I said, yes, I did, but I didn't see bull divs. The only reason I took it is because we did hit into our big resistance and we did see our 1-to-1 fib extinction target hit almost perfect. And I invalidated my own rules, guys. And that's why I took a loss on this. So discipline is key in trading. And there's some guys that are really, really good with discipline, like Jason Casper. I know Andy Bitcoin Consensus is awesome. All these guys are really good discipline. And if you do not see confirmations to enter your trade, no matter how good it looks, you probably shouldn't be entering the trade. And I violated my own rules and I got a loss for it. So learning lesson, don't even, no matter how nice the TA looks, don't take the trade if you're not seeing your confirmations. So anyways, I was looking at this as we were kind of, I was looking at this here as we were making that, and we hit into here. And when I saw us starting to bounce from here, I took a little bit of profit up in this area towards the top of the triangle, just because I said, oh, this looks kind of bullish to me. That's a continuation pattern, by the way. After a pump, you start doing a continuation pattern. You can expect another pump here. And so I didn't get stopped out here. I went to bed actually and woke up with the loss. And thank God I had a stop loss, right? Like, here's the thing, guys. Always set a stop loss, because check this out. If I would have shorted this here, which I did, here, and it was a relatively safe trade because I shorted here. My stop was just right above these highs here. So, and then I was targeting a couple different things down here. I was actually targeting like these lows here as one of the TPs in this area. But check this out. Let me actually put that back on. If I did not set a stop here, we didn't get stopped out here, came down, made another low here, higher low, so bullish market structure, and then we saw the big explosion to the upside. Now, if I did not have a stop there, look at this. You are going to get wrecked. So that's why it's always important to set a stop. A small loss is bigger than a big loss, is better than a big loss. So yeah, I mean, that was kind of what we were seeing there. We are at, okay, let's zoom out on this and let's check this out here. We are at our anchored VWAP from the highs. Yes, anchored VWAP from the highs of that move is in this area, and we did not SFP though, so this should be a sign. I mean, we did actually see a small SFP here. We got the SFP, we got to drop back down. If you did take that, then you should have TP1'd and you probably got stopped out on the rest, but XRP is looking bullish. I mean, this to me, instead of being an ABC, what I was looking at, now this is starting to look like a clear 5-wave impulse to the upside. So you have your lows here, your 1-wave, your 2-wave, your 3-wave came all, I mean, we could actually still be in the 3-wave, to be honest. And then you could see a 4 or 5 up here. I mean, the way this is looking, it does look like, and it's starting to look like an impulse. Now, if this is an impulse, let's check this out. Where's our 1.618 target? Let's go from the lows of 1 to the highs of 1 to the lows of 2. And we'll turn on our 1.618. Okay, we've even broke our 1.618 here. Actually, that kind of held his support. So now let's look at the 2.618. Okay, 2.618's there. Man, look at that wick. All right, let me zoom out on this so I can get some more room here. And let's do a Fibonacci pull from the highs to the lows here. Okay, we are in our macro golden pocket area. Actually, yeah. Ooh. Anchored VWAP from those highs is also our golden pocket. I mean, this could be a pullback zone. We weren't even seeing bull div in here, which is crazy, but you can see the money flow looks real nice here. We are topping out on our 4-hour momentum wave. Let's go see, let's zoom in on this and let's see if we see any low time frame bear divs here. Possibly higher highs in the price action here. Possible lower highs here. Money flow looks kind of strong though. So I would wait. I'm not trying to short here, even though it's our golden pocket. I'm not going to try to short this here because we are not seeing the confirmations we want. We are seeing bear divs here, higher highs in the price action, lower highs in the momentum waves here, and even, yeah, this is higher. So 3 drives of it, but look at the money flow. So just because the way the money flow looks, even though we're seeing bull divs between this high, and this high, 3 drives of bear divs, excuse me, money flow looks pretty strong still. So what I would do is I would wait to see if we're actually going to reject from this golden pocket. If we don't, let's actually zoom in on the 15-minute. Yeah, 15 minutes, not really bear divs. We're pretty much at equal humps on the wave, and money flow is starting to rise again. So you guys, this golden pocket might not hold as resistance. So if it doesn't, let's take this same Fibonacci pull. Let's turn on the 786 because yes, okay. So that's our box already. Let's zoom out. On XRP, our box of resistance is where our 786 is as well. So we have a weekly level up there. We have the value area low of our last range. So let me zoom out on this 4-hour chart. I'm talking about this range in here before our mega dump. So if we do a range pull of this range, our value area low is in that range. Our 786 is there and our weekly's there. So this at 302 to 305 is resistance for XRP. That's what I'd be as the first resistance. Now, I really, really do still like this 328.5 area to 329. And I'll explain why here. This here. So, yeah, I mean, we obviously had a huge, like 50% drop through all of this here. But after a big impulse to the downside, you can see a correction to the upside. Now, one of the things a correction can be is a flat wave. You can see a correction where you have a flat where you take out the highs of that dump. And if that's if we're going to see a flat wave correction here, you see your A wave here, your B wave here, your C flat, come up, take out the highs, and then dump. And that is a possibility here based on the structure we're seeing so far. This does look 1, 2, and now this is starting to look like one wave here. Yesterday in the video, I did talk about I wanted to see the ABC correction. Oop, too short. We were looking lower in here as this being an A wave, this being a B wave, and then seeing a C wave down. Ooh. But we didn't get that. We got the explosion up. So now that's been invalidated, guys. This A, B, C has been invalidated. And we were looking at that golden pocket down here, the golden pocket and the value area low of this smaller range. That's been invalidated, and XRP is looking more bullish than all of them. Let's actually do a pull here. So yeah, we're above our value area high. I mean, this, I'm going to delete this now because that's done. And I mean, this looks bullish. XRP is looking bullish to at least come to like that 302 to 305 area. What I would be looking for now, we are in that golden pocket. So I'm definitely not longing where we're at now. It's a macro golden pocket. And even if you think it's coming higher, look at your risk management on this, guys. I mean, like the most technical trade, you're in bullish market structure. This is your last low down here on a change on like the one, you know, this market structure here. If you break this on the hourly, you would be changing market structure. So if you're going to long where we're at now, even if you think it's going to 302, it's just not good risk management. You know, 302 up here, you'd have to put your stop below this low here. 1.66 risk reward ratio. To me, that's not good enough. It's too risky. Not to mention you're in a macro golden pocket resistance as we speak. So I'm just not doing that. I just, you know, you missed it. You missed it. You know, you could have played this breakout here. Now I was asleep when that happened, but I mean, you could have played that breakout. And then, you know, if you did play that breakout, you'd put your stop below this low here, and then, you know, bring it up to your golden pocket would be your first TP where we hit into just now. So unfortunately, we missed that trade. I was totally wrong on this ABC correction. Should have followed my confirmations. I didn't. Took a small loss. You learn. You know, you guys, no trader is 100%. If you were 100%, you could just 100x long everything and you'd be a billionaire in no time, compounding your trades. But it's about probabilities and also having discipline. If your confirmations are not there, you don't enter. And so that's where I messed up. I've noted that, and I will pay more attention to that. But that's it for XRP. I mean, now XRP, if it dumps, I mean, this does look clearly impulsive here, and XRP is looking pretty strong on money flow. Actually, let's check the daily chart here. Wow, look at that daily candle. Let's do a range pull of this entire area here. So we're breaking above that value area high as well. Wow, let me get rid of that. This, we could top out at least for the day right now where we're at, because it is the golden pocket and anchored VWAP, but it would be nicer to come up here. This is a pretty sharp impulse to the upside. I mean, like, let's go into this on the daily. Look at this impulse to the upside. After this giant wick that just wrecked everybody in this entire, everyone that was longing in here. was wrecked. Obviously, we took the liquidity lows there. Everyone was wrecked. Reset XRP. Now we're pumping again. So yeah, I mean, it's looking good right now. It doesn't mean that we can't see new lows again. I mean, this wick was pretty aggressive here. So when I say see new lows, I'm talking about like this low here. But there is still a bigger possibility to come down to like that 140. If we do, that's, you know, it's actually bullish to load up if you're long term. Yeah, but that's kind of what I would say here. Let's get rid of this. Let's get rid of this. I am just going to set a channel in here. Wow, look at that, you guys. Look at this channel here. So this is a daily descending channel here. I mean, look at midline respected, bottom respected, bottom, midline chop a little bit here, pump all the way up to the highs, midline all through here. So this does look pretty nice here. Let me make this pink just to make it easier to distinguish. So where's the top of that channel? It would be coming in around our 315 naked daily point of control in here. Let me check something real quick. Oh, wow. Okay. Naked weekly point of controls up there. This hasn't closed yet, but it looks like we're going to close the week bullishly. So we do have a new naked weekly point of control down here at 243, but I'm just not going to mark it out yet because we still have a couple days left in the week. I'll be patient on that. This one is interesting here. Wow. Let's get it right. Okay. Naked daily point of control. There we go. So, and then below us, of course, we do have some below us as well. Let's zoom in on this, and this one's pretty nice. Okay, that's about it here. If we are going to drop from where we're at now, we are at our golden pocket and the anchored VWAP from the highs, the all-time high, I think it is. So we have to be aware that this could be a rejection zone, and it's finally starting to look like it might reject here. We haven't lost it yet. I mean, there's still a very big possibility we come up to 302, but we are at a major resistance level. And if we go on to the 1 hour chart, and we're going to do a look, let's see here, 1, 2, 3, 4, 5. Okay, this could be the end of our impulse, actually. This could be the end. One wave here, two wave here, third wave to up to here, fourth wave. Now, I do not like how short that fourth wave is. Usually your fourth wave, I mean, there is a rule of alternation. Your 2 is long, your 4 could be short, but Usually your 4-wave is a longer correction than your 2-wave. So this doesn't look nicest as far as visually to the eye and time-wise, but this could be the end of a 5-wave impulse to the upside into a macro golden pocket and a anchored VWAP from the all-time high. If you did want to short this now, if you think this is over and you want to short this now, I mean, you are seeing some bear divs on lower time frames. So there is a bit of confirmation to short this. 30-minute bear divs here. 1 hour bear divs possibility here. So what I would do if I was going to short this is you're doing your short, you're going to short it from where you're at now. Your stop is going right above the high. You know, TP1 maybe there, or where's the back test to the value area high? So let's go look at this and let's look at our value area high here and see where that. Yeah, that's your TP area is kind of in this area here. I'll put it in between them. I mean, that is almost a 4-to-1 risk-reward ratio, so that's pretty good there. I wouldn't short it until we actually lose this anchored VWAP, because right now we're trying to flip this anchored VWAP to support this one up here from the all-time high. So, but it is a possibility it's done. The impulse is done. There is a very small possibility that's done. Not very small. There's a decent possibility it's done. So we'll keep an eye. Actually, I'm going to keep an eye on this. Okay, let's go to Link here. Dang, Link is just messing with us, man. Like look at these triple highs now. High here, high here. We didn't actually SFP it. So the high didn't get taken, and now we have triple highs to come up into. That actually makes me concerned that this might not hold. If we do come up again, we might take the liquidity. We'll see. We'll see. I mean, I'm going to leave it on there, but that sucks that that didn't get taken. Oops, what did I just do? But most of the coins are still in their range. You know, XRP is really the only one breaking out of its range and seeing a huge explosion to the upside. I do not know if there was news on XRP. Let's see, value area high is a little bit higher up here. So, yes, we could see a higher low come in here, bounce from the VWAP, make one more high into this box, and then see the dump. Not dump, a range. Well, dump, small dump, a range into the range still, playing this range. But yeah, we're still in this range. Play the range until it breaks. This does look a bit 3-wavy here. Like this, you know, something like that would be kind of nice to see. Let's zoom in onto like the 12-minute and see what we're seeing here. I mean, yeah, we were seeing some bear divs here, a little bit of bear divs here, you know, higher highs here, lower highs here. Our money flow is finally starting to kind of curve down now. It sucks that we didn't take that liquidity. What am I doing? So I would look for a bounce from the VWAP here, because the VWAP, look at VWAP held, VWAP held, VWAP held. I would look for a bounce from the VWAP to come up to this area here. At least to come take these now triple highs that we have not hit. Triple highs there. So I'm just going to set an alert here real quick. And then if that doesn't work out, we can look at our bigger golden pocket pull from the lows here to the highs. Come on. 786 is at our point of control. So yeah, I mean, this at 18.53 does look pretty good here as a support. And then let's go ahead. Let me zoom out into the hourly, and we could do our pull from these lows too. 786 is at the value area low here, but let's look at our golden pocket. Yeah, okay. So this definitely is our first support area from 18.536 to 18.418. Very local here. And then I would say now our next local support area is the 786 into the value area low. Actually, let me mark this out first. Golden pocket, smaller 786, POC. And then this here. That's a very small box there. Let's delete that now. Let's delete that now to clean up the chart. And then what we can also look at is new naked daily points of control. Dang. Okay, so right above the triple highs that we have now made, this box here, and I'm going to actually extend this box now to our naked daily point of control. There we go. So at pretty much $20, I mean 20 to 20.4 is definitely a resistance because we have a naked daily point of control, we have a golden pocket, we have the value area high of the range, we have our channel midline. Yeah, that's a lot there. So let's see, naked daily point of control, value area high, golden pocket, midline. Am I missing anything here? Oh, and the SFP into it. But also, guys, it is the value area low of our much bigger range. It's the bearish retest of this value area low. So that is right at the golden pocket too. So, and then we'll do, so we're going to add that to it. So bearish retest of value area low. Yes. Okay. So I do want to make one more high on Chainlink. I am going to be watching for a bounce from the VWAP. Bounce from the VWAP, come up to this area here, possible shorts up here. And that is about it, guys. I'm going to make another video. I have, let me go here real quick. So there was someone that made some comments yesterday and asked, let's see here. ADA. Yeah, I'm going to cover some more altcoins later today, guys. So I did just cover Bitcoin, ETH, XRP, Solana, Link. I will put ADA in there. By the way, guys, these here are always scams. You know, they give you a nice comment and then they say they have a 12-word phrase. They're scams, always scams. Do not fall for that. See, scam. I have to do this literally every single day. Get rid of these scam coins. Scam coin. Wait, that's not it. That's not. Sorry, Roman. I know for a fact you're not a scam. You're actually a really big supporter. Yes, in this link, could you please add a section like you do with the fib, teaching us how to calculate the next leg up in these coins? Explore. Yeah, so Roman, I will show you guys with how to use pitchforks to find targets, like in bullish targets or like even targets in price discovery and stuff. But you said it would, where was that? Could you please add a section or a separate video like you did with the fib, teaching us how to calculate the next leg up in these coins? Now the alt season looks clearer. Yeah, I can show you a couple things on this. So some of the stuff I'll show you is like Elliott wave based stuff, just looking at the difference between impulsive waves and corrective waves. But I can also show you some pitchfork stuff, some Fibonacci extinction, which is incorporates into Elliott waves. But I will make a video on this. I'll show you that in a video. Let's see here. There was someone else here that asked me some questions. Oh, yeah. Okay, right here. So, Kevin, uh, you just had a few of these questions. So I'd like to know how you draw a fixed range volume profile. Is it when there's a small consolidation after a large move, or when there's obvious sideways consolidation after a large move? So, Kevin, the fixed range volume profile, it's in the name of the indicator, or it's in the name of the tool. It's a range. You're measuring the volume of a range. So oftentimes assets will trend about 30% of the time, 35% of the time, and then they'll range like 65 to 70% of the time. So, of course, if you're ranging a majority of the time, when do traders have a good opportunity to make a lot of money? Is in ranges. You short the highs of the range, you long the lows of the range. And so, a fixed range volume profile, you can do it a number of ways. And I have covered this a little bit in some other videos, but it's a range. So, for instance, we had a giant dump here on Chainlink here, obvious impulse to the downside. Since then, we've kind of been going sideways and ranging here. And we even started to see this range, on day 1 or 2, not on day 10 or 11 or 12 like we're at now. So you can do a fixed range volume profile. You pull that from the end of the dump, the end of your impulsive wave, to to whenever the range is continuing. And right now we are continuing within this range. So you pull that fixed range volume profile and you're measuring the important volume levels. Remember, I say in this market, a lot of the times, I say this in a lot of my videos, liquidity runs these markets, and liquidity is based off of volume as well. So one of the major tools in trading is to look at where the volume levels are, to look at where traders are defending positions, or look at when traders are looking to take profit on their positions, and the volume takes into account a big part of that. And so what we can do is pull a fixed range volume profile, and we can look at these volume levels. Now, the point of control, this red line here, the point of control, that's pretty much the fair value of the asset within this range. So right now on Chainlink, in this little range, about 18.5 is considered the fair value of Chainlink. Now, the overvalue is the value area high. So if Chainlink gets up into this like $20 area here, in this range for the past 12 days, Chainlink would be considered overvalued. And the undervalued, of course, is the value area low for Chainlink. That's about $18. So we're playing between $20 and $18 right now. We're trying to find the fair value within this range here. But as a day trader, you can use these opportunities to short when it's overvalued, long when it's undervalued. And of course, your fair value level is just where the most volume has been traded. So the point of control is where the most volume has been traded to. It often acts as a support or resistance because the most volume is there. So say some traders longed the reclaim of the value area low here, and they know the most volume is here, they're going to defend their position. If they're building longs or, bigger traders, bigger whales, if they long the value area low and they want to see this make a bigger move to the upside, they're going to defend their position. So at the point of control, they might be looking to defend their position, or vice versa. If you shorted the value area high and you're dropping below the point of control and bearishly backtesting it, you might be looking to compound your position there, or just they'll defend their positions there. So that is the fixed range volume profile. But let me see what so how do you know when to use? So how do you know when to use the fixed range volume profile? When you're starting to form a range, you look for ranges to start forming. Now, there's ranges on many different time frames. So right now on Link here, for instance, we're on the 1 hour time frame and we're looking at a larger 12-day range here. But if we zoom in onto the 15-minute chart, look at this is clearly not a range. This is more of a micro trend to the upside. So, I mean, you're not really going to pull your volume profile from high to low here. You can. I do know some traders that actually pull a volume profile of the impulse. They look at the point of control of the impulse and they look to use that point of control as a support level. That's a little bit more advanced trading, and we can go into that a little bit later on my tutorial. I'll do a full tutorial on the fixed range volume profile, and I'll go into that a bit. But let me go to Bitcoin. So, I mean, you're looking at using the volume profile when a range is forming. After an impulse, you often see a correction. Now, the correction, let me zoom out here onto the hourly. After an impulse, you see a correction. So this was clearly an impulse to the upside here. We know that because volume increased as well. Since then, we've kind of been in this corrective structure all through here. And this corrective structure is part of it's a range type structure. It's more sideways and low volume. So you can pull a volume profile. That's why I also do think a volume profile pull from current to these highs here is also valid. Not including the impulse here is also valid. And we could look at this range too. But as far as the bigger context, I think this range is a little bit better. So yeah, so that's how you use the volume profile. You're using it to measure the important volume levels within a range. And of course, like for instance, if we zoom out to the daily chart, we're in a much bigger daily range here. Now this is like a $20,000 range, but range lows around this area here, range highs up in this area here. So you could do your volume pull on the daily, and you could trade the bigger range as well. Anytime we come down to the 91K area, look at this is why Jason longed this down here, because it was the value area low of this big range. We were at the value area high. We lost the point of control. Look at the value area low. Look to range the value area low. Look at in this range. If you would have just longed the value area low every time and only shorted near the value area high, or once you lost the value area high, so I know there's a lot of good people who literally trade only using their volume profile traders. So they trade based primarily off of volume trading strategy. And that's a great strategy to use. Actually, the volume profiles are severely underlooked, and I do think they're a great tool to use. Okay, where do you use as a starting port for the visible range volume profile? So I don't use the visible range volume profile too much. I like to manually pull my ranges using the fixed range volume profile. And I think maybe that's what you mean here, because you say, do you use the candle that closes within the range as the starting or the lowest candle before it enters the range? This is a bit subjective here. So for instance, let's zoom back in onto the 2-hour chart here. So this range that we've been in for the past 12 days, I know that like Jason and a couple other people, they would pull this range from the lows. They would include this low candle here, pull the range sideways. Now, to me, that low could be considered part of this impulse here. So I have been pulling it now. And so look at where our value area high is on that low. If you include that low, our value area high hasn't been hit yet. But if you take it right after the low and you put it on the candle right after that low, I think you get that because we're measuring the range. We're not trying to measure the impulse down. So if you take it right after that low, look at rejected to the dollar from the value area high. I think it's better. And then look at like this, value area high. So I generally don't include the impulse in it unless it doesn't make a difference. Like the other day I was showing on a coin, I think it was XRP. It literally didn't it was Ethereum. It didn't make a difference whether you included that or not. But I tend to pull it at the end. So see how now on this fixed range volume profile, I have it included in the fixed range volume profile here. And let's look at our value area high is at like 227.72.59. Now I will take this volume profile and I will just not include that big wick. We'll go right after that big wick. Oh, it does change it. Okay, so yeah, okay. I tend to not include the impulse. Like this, look how crazy this is. This is still part of the impulse down. This is still part of this mega impulse down. So you got to be careful including when it's part of the impulse, because we're trying to find the fixed range volume profile. We're trying to find the volume of the range after the impulse is finished. Oftentimes in the market, after you see a violet move down, you will start to kind of rebalance the market and range out a bit. So we're looking to find the fair value within this range and then either continue the direction to the downside or make a reversal to the upside. So that's what I'm using. It's a bit subjective. To answer your question, it's a bit subjective on whether you use that low or not. I know a couple good traders. Jason usually does pull it from the low. I don't. I try to take it right after the impulse finishes. And that's just based off the difference between impulsive price action compared to corrective price action or ranging price action. Okay, so wait, do you use the candle to close? Yeah, okay. Based on my observation, these are common support levels you always use as a confluence. Please let me know if you missed out on any. So channel midline. Yes, these are absolutely channel and channel midlines. I love them. Fib levels. Yep. I mean, those are the best fib levels. You forgot the 382 in there. The 382 often acts as support or resistance in a strong trend. So if you're seeing an impulse to the upside, if you're seeing like a 5-wave impulse to the upside, especially on a 4th wave. Wow, my magnet's getting in the way here. Let me. 1, 2, 3, 4, 5. So oftentimes in an impulse to the upside, it's usually a 5-wave structure here. It can also, it could be a more complex impulse, but it's generally a 5-wave structure here. And if you do your Fibonacci pull, your Fibonacci pull here from the start of 2 to the end of 3, or from the end of 2 to the end of 3, and you look at your 382, oftentimes in a strong trend, that 4th wave will retrace to the 382 because this is a super strong trend, right? You're in a super strong trend. So the 382 often acts as support resistance in a super strong trend, especially after a 3rd wave impulse. Now, a 2nd wave, you can often correction target for the 2nd wave is the golden pocket. But yeah, you get, so include the 382 in those fib levels. Let me delete that before I forget. It's on the chart. Okay, naked daily point of control. Yes, naked daily point of controls are so good. So once again, this kind of goes back to the volume and how volume and liquidity. I do think volume and liquidity are two of the most important things in the market to watch. And fixed range volume profiles. So a lot of people that are really day traders or scalp traders, Ponzi traders, an excellent lower time frame trader in our Discord that he uses a completely different candle strategy, range theory strategy. But if you're a day trader looking at only smaller moves in the market, depending on like a New York session or Asia session, if you're trading the different sessions and you're looking for small trades every single day, you can look at your periodic volume profile here and you set it to the daily time frame. So what it's doing is it's just taking a ranged profile for every single day. So if I was to, did I turn that on? And let me go to let's just go to the index chart where I can kind of get a fresh chart here. So if you have your fixed range volume profile and we go on to the daily chart here, you can see there's going to be a volume profile for each daily candle if it loads up. So you see it's giving you a volume profile for each daily candle. Now, the ones that haven't been touched yet, the point of control is the important part, right? Remember, the point of control is where the most volume has been traded. And that volume support or resistance level is a very, very important support or resistance level. So when you have a day of trading like this big day here, where you flush to the downside, you close a big red candle to the downside, but your highest volume of that candle in the trading day was up here. This point of control hasn't been touched yet since you created this daily candle. So it's naked because it hasn't been revisited. You can see here we had a flush to the downside. Eventually we came up to back test that naked daily point of control and we dropped right back down because it was a resistance level. So volume levels, especially point of controls, I mean, like, look at this here. This candle here was a big candle to the upside. We closed to the upside. It was a hammer candle to the upside, really bullish candle to the upside. I mean, it was doji, but way bigger wick to the downside than to the upside. And our largest volume for that day was in this area here. Well, then what happens? You dump really hard. You hit that volume level. Now it's no longer naked, but you bounced from that volume level because there's a lot of volume that is supporting that level. And then look at that bounce there. Look at that bounce. I mean, that's crazy. So naked daily points of control are very, very strong levels to use, and same with a naked weekly point of control. So the naked weekly point of control is the same thing, it's just on the weekly chart. You're looking at each weekly candle, and you're taking the point of control, excuse me, your point of control from each weekly candle. Like, look at this. We had this week down here, which was the start of our November 11th range. We had a naked weekly point of control in here. Look it, come down to it, hit the naked weekly point of control, perfect, and make a new all-time high from that. I mean, you know, naked weekly point of controls are definitely no joke. Excuse me, I got something in my throat here. So yeah, naked daily, naked weekly points controls, very, very good tools to use. I use the periodic volume profile, go into settings, you know, your period you want to set it for 1, and then what, 1 week, 1 minute, 1 hour, 1 day, no, 1 day, naked daily ones, 1 week, naked weekly ones, and even naked monthly points of control are pretty awesome to use as well. Like you can see that naked monthly point of control is right where that naked daily is. I have it. That's why 105, that's this 104.8 to 105 area. I'm really looking for that ABC correction to end. And if you don't know what I'm talking about, go watch the beginning of this video. But yes, that is why I do like naked POCs. They are so important. Liquidity and volume run this market. So that's that. Okay. Yeah. So naked POP for the day, for the week. Yep. Now, yes, your current consolidation range. Exactly. Like I said, assets usually trend for about 30 to 35% of the time, and they range for about 70 to 65% of the time. So if you're in a range, you're going to take the range and you're going to look at those important volume levels within that range there, the value area low, the value area high, and the point of control. And so this point of controls and volume profiles are absolutely one of the best tools to use. Very, very good levels to look for. Long when you get to the highs of the range. I mean, long when you get to the highs. Long when you get to the shorts of the range. Shorts when you get to the highs of the range. Okay, jeez. All right, let's go to the hourly chart. I mean, you know, for instance, this volume profile that we're seeing right now. I mean, volume profile, we're in a range. Add that range there. Short when you get to the highs, long when you get to the lows. Look at longed at the lows yesterday. Yesterday, we came into our value area low and our golden pocket. If you long that, a definite TP level would be the highs of the range. Hit the highs of the range. Look at this rejection that we're seeing from the highs of the range. And wow, okay. It's starting to get aggressive now. We were seeing bullish CVD up there, guys. I did warn about this in the Discord right before I made the video. Let's actually look at that. Right before we were at the highs of the video, at the value area of the highs. If we break this, we're pumping, but you know, we do have some resistance right above us. Yeah, value high. So I wanted to go into that box right above us, but I did tell everyone that we were seeing local bearish CVD at these highs here. $96K. But we are at that bearish back test of that band, but it doesn't look like it's holding. I mean, it could still. Let's zoom in on this. Remember that wave 3 impulse of this very micro wave 3 golden pocket at the bearish back test of the band, or at the back test, but we're breaking it. And not only that, now we have invalidated, the impulse is over, because look at our wave 1 has now been breached. So yeah, you guys, I mean, we knew to trade the range, short the highs of the range, long the lows of the range. And exactly, if you came up here, you should have been looking for a short up here. We had the confirmed swing failure pattern of our triple highs. I mean, this was such a nice trade here. This was such a nice trade. High here, we did take the liquidity of that high here, but this high, and then we had a semi-equal high here, and hit this. By the way, guys, by the way, So we had the SFP into the value area high. But by the way, let me go into this real quick. We did see an 8-8 touch on, let me delete that SFP now. If we do the, I talk about this a lot. So we had this high here at 98, 500-ish. And then we came to these lows. We came to the lows at 94K. And if we turn on our 886 here, we did hit our 886 level on this retrace. That's where we were rejected from. Well, anytime you hit an 886 level, you can look to now eventually come take these highs. Even if you see a dump afterwards, you can look eventually a correction afterwards, I should say. We had this little micro 1112 impulse. We had our correction yesterday, but because we hit this 886, these highs are now a strong target to come take the liquidity of. What happened today after our correction yesterday? Take the highs of that level into our value area high and start dumping. I mean, you know, if you just know what to look for, it is highly probable that we were going to come take these highs into our value area high. And now that we've done that, what's happening? We're reversing. Doesn't mean we can't find a higher low support. I am looking at this area, 96K area, as a local support level, 786 into our point of control of the range. But, and even actually right here where we're at now, we could find some support because it's our local golden pocket and it's the bigger pitchfork band here. But yeah, so, trading, man, trading's awesome. Technical analysis is awesome. Okay, so current consolidation range, yes. High time frame, point of control, yes. These are great to use, especially higher time frame. The higher time frame they are, really the stronger they are. Daily level. How do you draw this naked daily open level? Okay, and a weekly level and a monthly level. Okay, this is very simple actually. So let's go ahead and let me get back on a clean chart. Let's go onto the index chart here. And so we have Bitcoin here. We're looking for daily levels. You go onto your daily chart. In your daily chart, you can see here when a candle, you have a green candle here, and then the very next day you have a red candle here. So when your candle close and open are at the same exact position, so it's always going to be green candle, red candle, or red candle, green candle. But when they close at the same exact area, you can see here, they closed. This open was also the highs of yesterday's close, the next day's close, right? So when you have an open and close at the same exact area, that's a fresh daily level. So we would mark this out as a daily level. And then right now to the downside, for instance, you had this level here where it was a red candle, and then you had a green candle. So this is a daily level. Now that daily level is not naked anymore. After you tap into it daily, you really want to get it rid of your off your chart. So right now to the downside, we do not have any naked daily levels below us. Actually, if we close today's candle green, I would not mark this out yet because we have not closed green yet. But if we close today's candle green, there's a daily level for you right here. You know, and so that new daily would be at like 96,670 or so. Daily level up here at 104,742. Daily level to be looking. Now at the same, that's how you find a daily level. Same thing on the weekly level. Just go to the weekly chart, look for a weekly naked. By the way, okay, I'll show you this. This is why we knew to look for a short from 1025. This was our last weekly level here. Let's mark that as a weekly. Let's zoom into our 4-hour chart. Now, we had that mega dump happen from the tariff trade fears, right? That happened 12 days ago on a Sunday. The very next day, we saw a very aggressive V-shaped recovery. We bounced right up to our weekly level, rejected to the dollar from our weekly level. So that was a naked weekly level that was up there. And it was also a golden pocket pull from the all-time high to our lows of that crash. If we look at our golden pocket. So, I mean, look at that was the strongest level to look for a rejection. We pumped up to the strongest level and we rejected. Also, it was the value area high of the range. Actually, it was a little bit, the value area high we didn't touch. We front ran it, but it was pretty much the value area high of the range. See, the value area high is a little bit higher. But this general box of resistance was our main box of resistance. That's why we did reject there and drop. So weekly levels, really important to mark out. Naked weekly levels. Great tool to use. Same with the monthly, by the way. I mean, monthly, you just go onto the monthly chart. Same thing. Monthly chart. So if we close this candle red this month, we still have what, half a month left to go. This will be our monthly resistance. 102.5. If we close the monthly red, it's not closed yet. So our last valid monthly level that hasn't been touched, let's see, we touched that one. I mean, on our last monthly, gosh, it's down here. 26K. You know, so monthlies, you don't mark out too much. I do think, let's see here. Yeah, we hit that monthly. Okay, so yeah, that's that. How do you draw them? Okay, so I just showed you how to draw them there. So, yep. And Roman, let me check your answer real quick. No, that's not it. Roman. Teachings how to calculate the next leg up in these coins, how alt season looks closer. Yeah, I mean, there's a few ways to calculate targets for like legs up, right? And one of the biggest ways why I'm starting to dive more into Elliott wave analysis is because Elliott waves are a very good predictive tool to help you. Like, let's go on to the weekly chart on Bitcoin here. I mean, it's so good here because you can look at Elliott waves, and you know there's two main structures in Elliott waves. There's impulse waves and there's correctives, corrective waves. But look at this impulse on Bitcoin. A clear one wave up, a clear two wave. Your third wave being your longest, most explosive volume filled wave to the upside. Your four wave correction, and then your fifth wave. Is our fifth wave in now? That's the big question. I don't think it's quite in yet, but it's close. And then of course, look at your volume here. You've got a big volume spike here in your third wave. Yeah, it's not the best though. I mean, really look at, if you want to look at us, if you want to be like a perma bear, even though we've made new all-time highs, you can see that our volume has been decreasing the entire push up on this bull market. That's not the best thing to see. That means when we do go into a bear market, I mean, people think we're never going to go below 100K again. You're so wrong. People think we're never going to go below 70K again. That could happen so freaking easily that, I mean, I feel bad for those people, if it happens, who knows? Maybe Trump buys a Bitcoin, a million Bitcoin for the reserve, and it goes up to 500K, and we never do see it. So, we do have to account real world situations. But I'm just saying, so how do you calculate targets for next moves up? Let's look at like let's go to ADA because someone asked about ADA. ADA is still very nicely following this descending channel on the 4-hour. You can see this blue descending channel. Let me make this pink so that it's our unique color. But you see this channel here, this descending channel. ADA's been really nicely following this descending channel after, by the way, after a clear impulse to the upside. Look at this is a straight line impulse to the upside. This looks more corrective now. This is a mini impulse within a bigger correction. That's where it can get a bit confusing. But let's go into ADA real quick here. So check this out, guys. We had our support resistance flip here. It's a very important support resistance level, broke it to the downside, rejected it, made new lows, finally broke it to the upside, back tested it, made new highs. So this SR flip level has been really good. Let's go ahead. Now, looks like we still have some areas up here. Let me make sure these are still fresh areas. I haven't checked ADA in a couple weeks here. So no, this is not even, this is real old stuff. Let me just get rid of it all and we'll redo. Oh, Haven't quite hit it yet. Ooh, I do not like this, though. Oh, shit. It's already 2 o'clock. Hey, you guys, I got to get going. I will make another video. Roman, I'm going to make another video covering your question. And then I will cover Ada as well. But I got to get going right now, guys. Have a good one.